a senior Treasury official just holding a call with reporters ahead of Treasury Secretary Steven Mnuchin's trip to Bali, Indonesia, which is the upcoming IMF World Bank meetings. Every few years, they do the annual meetings overseas. As far as what Secretary Mnuchin is going to be focused on, what the U.S. administration is going to be focused on, he's going to be meeting with his fellow Treasury officials and central bankers. The priority is on global growth, not trade. That's really the headline out of this call. Worth noting that the Chinese Vice Premier Liu, who is Secretary Mnuchin's counterpart in China, will not be there at these meetings in Bali. If there are other meetings, we're told, with other Chinese officials, trade will not be a focus, which sort of jives with the administration's approach that we don't do this on a multilateral stage with other governments. We do this bilaterally. That's why the Treasury is saying don't read into these meetings so much. We're not solely focused on trade. We are willing to talk with China on trade as soon as they are ready to have meaningful discussions. There's a headline for you on the trade imbalance. This is nothing new. We've had this stance, according to the Treasury, for quite a while, and remains to be the case. Also, guys, just wanted to point out a headline on the Chinese currency manipulation question. Treasury official says we'll continue to closely monitor the developments. We remain concerned about recent depreciations, and we're broadly concerned about China's turn away from market-oriented policies and continued reliance on non-market policies that impact the macro environment. The Treasury official says more details on that in the Treasury's foreign exchange report, which will come out next week, the week after Bali. Guys, I pointed that out because the Chinese currency does continue to weaken, but many read into it as not China doing that for a trade advantage, but trying to keep it from weakening too much, where it would really cause capital outflows and more of a deterioration in their own economy. So that's going to be politically sticky if the U.S. starts to call out China in a more meaningful way on that front. But bottom line, there are significant trade issues, and they're not going to be discussed at a forum like a G20 or an IMF World Bank meeting. That's just not the way this administration does business. No, for sure. And I think absolutely the right point there on the currency, which is a question of how much they let it depreciate as opposed to actively forcing it down. It would be falling further if they weren't still propping it up much. But Mike, I guess the other point is just broadly the data, whether you're looking at reserves, the currency, the stock market declines, or the latest PMIs, it is softening in China. Yeah. And I guess we always take any reading with a pinch of salt from China. And if they're worsening, then it's clear that the trade war is impacting the economy.
And I think that's what the chief market concern is, that things get disorderly and there's a harder landing in China, and they can't actually hold it together with some of these, stimulus efforts. So that's why I think the market is responding.
That's certainly what the administration is banking on. But you hear two narratives with China. You hear their economy's collapsing, their stock market's collapsing, their currency's collapsing. They're going to have to come to the table to make a deal. The skeptical take is China has a much longer term view, politically, economically, firepower to prop up its economy. And I think the jury is still out as to who has the leverage on this economy. If you look at the stock markets purely, it's the U.S. But there are some deeper questions around that.
Yeah, and I think, but if you look at the currency as well, which is down nearly 10% in 6 months, again, it suggests that, which is a massive slide, exactly, which suggests that the U.S. has got the power. But as you suggest, the currency reserves, 14-month low, but still over $3 trillion, still about 27% of GDP. They've got a war chest.